So you could really kind of make some of the same arguments, that I made for buying Disney stock for NBC Universal because the parks and the experiences are driving the revenue that is going into and the expenditures that are going into Peacock. But I would like to see Peacock, at least give us a goal date because I know they probably have this internally. I'd like to see it out there publicly too, because once they put it out there publicly, that means they're, at least confident in saying this is the year that this is going to be profitable.
I do have a question for you. Since you like NBC, you've made your case for Comcast. I'm not a buyer. I'm not buying it. But I did have a question come up from a listener who bought into Disney based off your recommendation.
Hmm.
Are you looking for more long-term growth with Disney, or do you feel like, they're kind of going to sit right where they're at for a while?
No, I'm looking for more long-term growth.
Okay.
I'm looking for more long-term growth of the recent investments in the parks and experiences division and the cruise lines. Yeah, and I think that Disney itself, the Disney Plus platform, is going to become more profitable. I think that the ESPN deal that was just made. I think it's $30 a month that they're doing on the streaming. I wish it was a little bit lower. I wish that price was a little bit lower, especially in such a high competitive market. But they're going to have deals with the NFL. They just landed a major deal that's probably going to be undervalued by the market
If
with
you
the
have the bundle, it's
WWE.
only $10 more a month.
Well, right, but with the WWE going over, that's going to be a big hit to Peacock. All the WWE fans that are going to, get rid of the Peacock app at the end of this year in order to switch over to ESPN, where all the pay-per-views or premium live events, whatever you want to call them, are going to now be sitting. That's going to be a hit to Peacock, but a boom for Disney. So I'm looking for more long-term growth in Disney for sure.
Gotcha. All right. Fair enough, man. Am I
Yeah.
good to move on?
Yeah, we're good to move on.
Perfect. All right, I got some oil news. Oil news. So this one just came out this morning at 8:11 a.m. Eastern Time. The headline reads, "Exclusive: OPEC Plus plans another oil output hike in November." So OPEC Plus has been saying that they're going to continue to raise the output all year long. Ever since they hit that low back in April, I've been covering this. Pre-April, there was a division in OPEC that was fighting amongst each other. I believe was it Kazakhstan or was it Kazakhstan? It was one of them. I covered it, and they wanted to output more oil because they wanted to pay for the country's infrastructure and build up the IT strength. And I covered it, and I can't remember now off the top of my head. Man, that's how bad my memory's getting, Brandon. But in April, when President Donald Trump took over, he had worked with OPEC Plus to lower oil prices, and they have agreed at that time, back in April, to go ahead and over the course of the year, raise the output by the end of the year, be at a certain level. Well, oil prices have all of a sudden jumped back up. This has something to do with Ukraine and Russian war because Ukraine made a significant strike on Russian refineries and Russian output, and thus, the amount of oil being output would drop by quite a bit due to that strike. So that did make the cost per barrel go up. Well, and because of that, that is one reason why they are doing extra. They're considering doing an extra rise in the output, which was, hold on, I got the number right here. Well, I had the number right here. Right now, I'm currently looking for the number right here. So let's just go over the total numbers. The group's total output reductions at the beginning of the year was 5.8 million barrels per day. That was voluntary cuts at 2.2 and 1.6 by 8 members and another 2 million by the whole group. So the current amount, fast forward to where we're at now, the eight producers plan to fully unwind one elements of that 2.2 million barrels per day by the end of September. For October, they're going to consider removing a second layer with an increase of 137,000 barrels per day. So that 137,000 number is the new number that's been put out this week by OPEC Plus, and it has a lot to do with that Russian capacity drop. And so it's really a wash. And so oil come Monday morning should be dropping in price because they're making up for what Russia lost.
Okay.
It's what we're looking at. But Brandon, any things that pop into mind here in regards to oil for you, or is this just a reminder that there's still a war in Ukraine and Russia and has a lot to do with oil?
And it's just a reminder, and it doesn't seem like it's going to come to an end anytime soon, unfortunately.
It doesn't. And the implications of oil, I've covered on the show from time to time, like the deals with India buying Russian oil and the U.S. putting pressure on Modi saying, hey, to quit doing this, yada, and sanctions, yada, yada, back and forth. And what happened with Europe buying Russian oil, even though Russia's attacking Ukraine. There's been this whole back and forth of oil and Russia in this war, and it's looks like it's just going to continue. And OPEC has been trying to mitigate the effects of it by making cuts one day, one week due to it, and then also raising output one week, another week due to it. So it continues to be an issue. Here's an article that I found very interesting. Came out to this morning and on 9/28 at 5:49 a.m. And I found it interesting, Brandon, because it has implications towards Boeing. And it's not good news for Boeing, but it has nothing. But this is not Boeing's fault. So bad news for Boeing, not Boeing's fault this time. Nigeria. So Nigeria, if you don't know, is Africa's most populous nation with 230 million people living in Nigeria. Well, their civil aviation authority is certifying China's C919 jet for the country's carriers. The Chinese plane maker Comac, or COMAC, is producing the C919 jet for for Nigeria. So they're trying to move Comac into a position to where it can compete with Airbus and Boeing. And this deal that are looking to cement with Nigeria is the first step in that direction. However, there are still some problems with getting the Comac C919 jet certified for Western nations. They're hoping to make the deal with Nigeria to make it for domestic in Nigeria and maybe in and around bordering countries with Nigeria. They are making some concessions here in order to get these done, however. So let me read on here. Najomo is the hold on, is the Civil Aviation Authority's Director General, Captain Chris Ona Najomo. Najomo said that SOMAC officials had offered maintenance and training support for any planes operated by Nigerian carriers and was exploring a so-called dry lease arrangement with involved leasing aircraft without crew. So that is the deal that Nigeria is trying to make with this Chinese airplane maker, and this would be the big move on behalf of the Chinese airplane maker Comac to make the direct challenge, if you will, to Airbus and Boeing. Thoughts, Brandon?
I'm not reacting to it yet.
No?
A very small amount of international air travel.
It is a very small amount of international air travel. However, this is the first time that another carrier other than Airbus and Boeing is inking a deal with a
Sure.
large country, if you will. And so that is the significance. It is small in comparison. It is a low dollar amount. It's just a handful of jets. It's more of the symbolic nature of it that like, hey, look out, Airbus, Boeing, we are starting to move into this field here, and we're planning on taking control. Oh, not taking control, taking market share away from you. And with
Hmm.
Boeing doing so bad, it is ripe for the picking
Oh, for sure.
for another company to come in and take market share. So Boeing really needs to get their act together if they're going to stave off a Chinese airplane maker, Comac, and keep them at bay. They really need to get their act together here.
Long overdue. Get
Yes,
a duopoly on aircraft, and one of the players in that duopoly has been not safe and not efficient and probably overpriced as well.
very much overpriced. Although I did say if it dropped below $100 a share, I would buy.
Yeah.
Just because where else are you going to go? That's what we've always said.
Well, I
Where
mean,
else are you going to
the
go?
overprice is like how much they're selling the aircraft that they're
Oh, yeah.
leaving. So, yeah,
The Dreamliners
to get on
are,
their
by the
game.
way, this is side note, FAA did approve all Dreamliners to be able to be flown in U.S. airspace once again. So
Okay.
you're going to see those back on the old board. Moving into the next article, this has to do with Costco's earnings. Costco's earnings came out last week. Costco's stock fell more than 2% early Friday after its fourth quarter results showed U.S. same-store sales came in slightly below forecasts. I did not see that in the numbers. Um, there was tariff-related pressure, quote unquote, competition from peers like Walmart and Sam's Club, which is the same company. Costco headline profits and revenue beat Wall Street expectations. So revenue at the wholesale giant clocking in at $86.16 billion compared to expectations of $86.03 billion. Adjusted earnings per share came in at $5.87, little, just a hair higher than $5.82. So everything seemed right in line. However, same-store sales grew at 6.4%, which was higher than the 6.2% growth that was expected. So they beat on the expectations. U.S. same-store sales were lower at 6% compared to expected 6.1%, but just a little bit lower. Here's where the major growth came. It was Canada. Canada same-store sales grew at 8.3%,
Nice.
which was higher than the 6.8% jump predicted.
Nice.
International markets were exactly in line at 7.2 actual and 7.2 estimated. The growth in market share came because Walmart Sam's Clubs posted the same store sales growth of 5.9%, so less than Costco. Costco is growing by more. Annual, I could talk maybe, revenue for Costco fiscal 2025 tallied in at $275 billion with adjusted earnings per share of $18.21 per share. Same-store sales have beats as well at 7.6% growth versus 7.5 expected. Now, of course, the CEO's got to get on and talk about his hot dogs. Quote, this is a quote from the CEO at Costco. There are no better examples of this than our hot dog combo, rotisserie chicken and Kirkland bath tissue. In
I love that hot dog
2025,
combo.
right? In 2025, Miller Chip boasted that the company sold over 245 million hot dog combos, over 157 million rotisserie chickens, and enough bath tissue to reach the moon and back over
Oh,
200
wow.
times.
Wow.
Year
Wow.
to date, however, Costco's stock has been a laggard. With Friday's decline, the stock is flat for the year, and the S&P 500 is at a 13% gain. So a flat stock for Costco. How I believe Costco is fairly valued, and it just had a good run last year
Yeah.
that really pushed it up, and it's fairly
Well,
valued where it's at. I'm not expecting any more growth in the stock without some kind of catalyst to provide that growth. Brandon?
well, I think what you just said too, I mean, the stock was down 2% after the earnings beat, and that to me, again, for people who are thinking that we might be in a large stock market bubble, I mean, a lot of companies beat, and the rewards for beating this quarter didn't seem like they were very
Yeah,
big. I think the average increase was like 1 or 2% or something like that, whereas companies that missed were dropping a lot further than that. And that's not at all a symptom of a big stock market bubble, which, first of all, generally speaking, the stock market itself doesn't usually go into one big giant bubble on its own. It's usually a bunch of different bubbles, right?
yes,
Here and there. It's not a whole big everything's overvalued and overinflated. But yeah, again, I think what the stock market's reaction to Costco earnings beat is another symptom of us actually having enough cautious outlook and a cautious optimism to where it's not a stock market bubble. But
yeah.
I do believe in what you're saying right now. I do think that this is fairly valued, whereas if you were to buy it right now and hold it over the course of a number of years, you're still going to have increases, but there's better opportunities out there.
Exactly. I couldn't have said it better myself.
Yeah.
My last bit of news, Brandon, is for you. This is a question, and this has to do with earnings. This week, the only major company that I saw that look at, sorry, there are major companies reporting earnings this week, but the only one worth of noting for myself is a question for Brandon. Nike reports on Tuesday. Is
Okay.
this turnaround for real?
Yeah, I think it is. I think it's going to take longer than what was initially anticipated, unfortunately, even by me. But I do think it is for real.
So what are you expecting to hear on Tuesday?
I just want to see that price to earnings ratio come down. I don't want to see earnings go up. That's what I want to see. I want to see the price to earnings ratio go down and earnings come up. And I'm expecting to hear more about how they're handling tariffs. Hopefully they're getting that under control. Hopefully their supply chain's getting better. And I want to
You're not
see.
worried about market share? Because I believe
No,
they're still
I
losing.
mean
I believe
honestly,
they're losing market share still.
I think that peaked. I think that's already peaked. I think the loss of market share has already peaked. So I want to hear more about like, retaining market share that they already have and gaining it back, which essentially just becomes going back to the basics and store sales of Jordans and things like that.
Gotcha. Because again, I bought two more pairs of shoes since the last time, and none of them were Nike.
Really?
Yeah, I don't own a pair of Nikes right now.
You don't have any pair of Nikes?
No, no Nikes.
That's
For
interesting.
for working out, I have Hoka's, On Clouds, and Born Primitive. Those are my
Okay.
three brands that I for working out right now.
So if I'm right in the turnarounds for real, then that means that there's more opportunity,
It does
right?
mean there's more opportunity.
But
Yeah.
if I'm wrong, then that means that it's a continuously declining brand. So I'm hoping I'm not wrong.
Yeah, and for fashion sneakers, I have Adidas fashion
Okay.
sneakers because they have different colors and different styles as
That
well.
makes sense. You have
And then I'm different from everybody else who has Nike Air Force One on different colors. I got Adidas in different colors.
okay. You got your fascist sneakers from Germany. Oh, you said fashion.
Fashion.
Okay. I'm just kidding. I was messing around. I don't know.
All right.
Okay, crickets
Final
on that
thoughts,
joke. All right.
Brandon. We'll move to final thoughts now.
I haven't made a complete decision. I'll have a decision on Comcast by the end of the night, but I'm thinking I'm probably going to wind up buying it. We'll see.
All right. My final thought is on this. I'm going to give everybody here an update on this $20 a paycheck or $20 every 2 weeks, I guess, that I've been putting into Robinhood to mimic someone who's just starting off. I'm currently up to now $307.38 in that account.
Nice.
I am now switched to a fully dividend only investment approach on this account. We'll see how this works out. I have no idea how this is
But
going to
why
work
would
out,
you do?
Brandon.
You're doing dividend only on just starting
I'm
out?
doing dividend stocks only.
Okay.
Dividend stocks
That I
only.
mean, that's
And
interesting.
it is. And I'm using the dividends. I'm buying two different stocks, and the dividends they pay out buy two other dividend stocks.
Okay.
And eventually those two other ones will buy two other ones. And that's how I'm growing this account.
What do you have in
And
it, if you don't mind answering that question for
currently,
me?
currently I own three stocks right now. Currently,
Okay.
I own ARCC, I own Coney CONY, and I own Misty MSTY.
High dividend yields. What are the yields on those?
Coney and Misty High
I
are
know
very
Coney's monthly.
are risky. Those are risky. ARCC is a typical investment company, and they pay a high dividend percentage, and they pay every 3 months.
Okay.
Like Coney and Misty, yes, are monthly ETFs dividends.
Gotcha.
And yeah, that's where I have it looking right now. One thing I will talk about, GE Vernova has taken a dip the past couple weeks. I I look at all these data centers and they're going to need power for it. I would use this as an opportunity to buy more GE Vernova on these dips because I don't see a reason for it. I looked in some news. I tried to find out. I don't see an actual, real, fundamental reason for GE Vernova taking a dip right here. I still believe in the company. It's easy for me to say that since my cost basis is less than $200 a share.
It's
But
got a high price to earnings ratio, which I mean, yeah, it's going to take a dip when there's market pullbacks. That probably dip a little bit further than others, but I mean, there's no lack of catalyst here.
yeah,
I mean,
there's
the stock is dipping at the same time we're getting news reports that the U.S. grid is in danger of being overloaded
so there's
with
plenty of
artificial
opportunity.
intelligence.
Yeah.
Yeah.
Plenty of opportunity. I do want to mention one quick thing about Rig Transocean. That company took a big hit this past week because they offered shares for sale to pay off debt, and the shares they offered for sale were at a steep discount. It drove the stock price down because of that news. And the fact that you have to sell shares in order to pay off your debt is not good sign for most companies that that's the only way you can pay off debt.
Right.
That's not a good sign. That means you're not in good physical financial health. This is a company on the show that I've traded before, traded, not invested with, traded as an on the show before, and that's not a good sign for them. And
No,
considering they just launched the biggest ocean rig, oil rig in the world recently, I'm kind of worried about their financials that they're having to do this. That tells me their leases on these oil rigs are not what they were boasting about just 6, 9 months ago. So not a good sign for Transocean. Some of these other oil companies also not doing as well. Exxon's been stagnant right where it's at for a long time, for over a year now. Been right around the 110 to 108, 120 range for over a year. It hasn't really moved. None of these have moved. So not looking too much as far as oil stocks right now. And yeah, that's right where I'm at. There you go.
okay.
All right, we thank you guys for listening. We hope you like what you've heard. We hope you hit subscribe button. Tell your friends and family about us. If you're in Switzerland, I'll see you soon. Thank you all for listening. We've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.